Hey, we're live.
Hey.
How's it going? June 20th, 2024. My voice is slowly coming back. Every week it gets a little better. Don't ask. But we've got some interesting things to talk about today. Richard is in Amsterdam, so he'll give us a little update on that at the deribit. Well, I guess you're at the head office, right? That's
Yeah,
about
today.
yeah. He even got a nice haircut. You know, I was going to give my haircut this week too, but I didn't. But maybe I need to do that. Yeah, lots of good stuff happening. More people rolling into the room, so we're just gonna hang tight here for a little bit before we get started. As always, June 20th. Interesting day. Interesting day. I was looking back like in the 1600s, 1627, 1631. That was the time. A lot of people don't know, or they're being not told these things. But the British Isles and a lot of places were being regularly attacked by the Ottomans and Algerians and different people from that part of the world. And actually, on this day in 1627, the Ottomans attacked Icelandic villages, took hundreds and hundreds of slaves, and the Irish village of Baltimore was attacked by Algerians just a few years later. Same thing, took lots of slaves. People don't like to talk about that, though. It doesn't fit the narrative. But more importantly, 1975, and this is significant because this affected me. That damn movie Jaws came out.
Ah.
And I tell you, that movie freaked me out so much as a kid because I'd be in a pool swimming and I'd start thinking about it and I'd get freaked out. I'm in a pool, for God's sakes. There's no shark there, but it would get in my head.
Right.
I'd be in a lake. It would be in my head. There's no sharks in lakes, but oh my God, that. Even now, if I'm swimming in the ocean, I'm like, okay, don't think about it. Don't think about what could be underneath you. And I've done lots of scuba diving and stuff. I don't know. It still freaks me out. That show did it to me. That and what's that horror movie with the girl, her head spins around and
Exorcist.
Oh my God, that one scared me too. Yeah. Anyways, all right. More people rolling in. Let's see here. We got Vladimir. Good to see you. Jandrea, excellent. Cora from Holland. Andre, fantastic. Let's get started with the format for today. What are we talking about? Well, one of the themes, we've got a couple different themes because we've got accounts pretty regularly hitting new highs. I think we got new highs on two of the accounts at least. We'll talk about that a bit. But some of the other accounts I have, and I'm looking over here at some other screens, you know, I think I've probably increased the account in the last 3 weeks, you know, say 5-6%. And I think a lot of people are like, well, hang on, the market's done squat. You know, it's not going up. These are the markets I love, actually. Right. And I trade these a lot better. Yeah, I'm more tuned into like market maker strategies where I'm kind of on both sides, back and forth, versus big trending markets. And the problem with big trending markets, and I think this happened because, you know, I started off as a prop trader for a big company, and I sat in a room with hundreds of guys. Is you got to make a living every day. And if you have the patience to just sit back, like I do a lot of FX trading now, and I post that in our members group, there I'm sitting patiently. Sometimes it could take weeks for something to set up. If it sets up at all, fine. You take the trade. If it pans out in a few hours, a few days, a few weeks, whatever, you just sit there and wait for it. I'm not making a living doing that. If you're making a living doing that, you better find something to bloody trade today and make some money at it. So every day you're kind of hunting for different equities that are looking good. You know, they've got some good volume. They've got some volatility. You think you can get out. It's not a disgusting spread, you know, whatever. A lot of times, you know, we would have things called bullets. If you traded stock, you know that in order to short a stock, you need to be able to borrow it from your broker. Well, we would find a way around that by having put options we call bullets. So it allows us to short stocks that other people couldn't. So sometimes that was a consideration as well. So there's always different things. The point I'm trying to make is you learn to make money in any market. Doesn't mean you always do, but you should try, right? And markets that have good back and forth action, allowing you to get filled on the bid and the offer, because you'll also be making money just by providing liquidity, was a great thing. And those habits for those years carried over. And, you I love being able to ride a trend, but I never believe a trend. I try to ride it, but I'm like, oh, it's got to end now. And I short it and it goes against me. It's like son of a gun. But anyways, we'll get into that. So let's talk about what do we got here? I got different screens up. Directionless markets. All right. First off, let's do a little update. And of course, you can follow us on these stuff here over at Patreon. We do live streams every day, Rogue Trader Academy, or join Rogue Trader Academy. And you can check out our live streams, our real-time trade alerts, our courses, all kinds of great stuff. All right, let's take a look at the account that we set up specifically for you guys at Deribit Live. And this is the synthetic miner account. For those of you new, this account is simply designed to accumulate more Bitcoin. We don't really care so much about the US dollar value, although that's up quite nicely. But we're just trying to accumulate more Bitcoin because we think Bitcoin is going to keep appreciating in value over the next 1, 2, 3, 4, 5 years, whatever. All right, so what are we up? We started off 16 weeks ago to the day, and we started off with 0.0825 Bitcoin, about 5,200 or something like that, worth of Bitcoin at the time. And we can see we're up. Our Bitcoin cash, 0.1140, Bitcoin equity up 0.1117, and the Bitcoin mined is up 35%. So we've made 35% more Bitcoin in 16 weeks. It's doing what it's supposed to. Could we be more? And we're keeping risk under very, very tight control. It's been a good market. There's been some days or weeks where it was a little challenging, but fine. And let's see, starting cash. Well, there it is, 5,500. That's what we started off with 16 weeks ago. That was the value of the Bitcoin we bought. And it's up 7,500 now. So that's pretty damn nice. It's probably about a 40-something% return. Well, in fact, we'll jump to the spreadsheet in a little bit. We'll talk about that. If we want to talk about an annualized return for US dollar synthetic, it's 208% versus hodling. So 16 weeks ago, if I just came along and I bought this and said, nope, I'm just holding this Bitcoin, well, I'd be up 14%. Nothing wrong with that. But we're up 208%. So you do the math. All right. Here's our beautiful little chart looking really nice. This is our Bitcoin return synthetic miner. Nice uptrend. Richard started recording sort of where the chart starts to smooth out. He started recording our stats every day versus once a week to make it a little bit more relevant, looking really great. If you want to take a look at the USD return on the synthetic miner, looking pretty good. We've got that nice upwards trend and trajectory. Let me pop over to
let's just mention the difference between the solid blue line and the dotted red line is our improvement over hodling.
Yes, yes, the red line is hodling in both cases here. In this one here, hodling is always going to be flat straight because you're not adding any more Bitcoin. And here, this is just the US dollar value. So, yep, looking pretty damn good. Let me just turn this slide off. Let me go to slides. I'm the only one controlling the presentation today because Richard's on one screen. So, there might be a little bit of momentary, I don't know. I'm trying to think of a clever word for me screwing up, but I can't think of one. Here, let me make our heads a little smaller. And here is our spreadsheet. Let me go to, there we are. All right, this is a synthetic miner account that we just talked about. You can see our starting cash way up here, and this is on the 29th of February. We started this 16 weeks ago, starting off with 0.0825 cash, 0.1140. Again, 35% return. 16 weeks. I think it's fantastic. Again, we're not taking on a lot of risk. We keep risk under 30%. I think only a couple of times the last 16 weeks did we briefly for a very short period of time, went up to like 33 or 35%. For the most part, it's in the teens or the low 20s. We're very, very happy with that because if we do get a giant 20% move in one direction or the other, we want to make sure we have the firepower so we can roll and adjust positions. We'll get that money back. We'll always get that money back as long as we don't run out of margin. Whether that takes 3 weeks or 3 months, we'll get the damn thing back. Just don't run out of margin. So keep your risk low. Where's our US dollar cash? $7,500, up 41%, looking really, really nice. And as Richard I didn't realize we had this column over here showing us when it hits 0%, we're hitting a new all-time high. So we hit a new all-time high today in terms of our Bitcoin equity, which is the point of this entire strategy. So any comments on the strategy before we move on?
So I think what's interesting about the strategy is it's got quite a low sharpe ratio, which I mentioned last week, which means the volatility of returns is quite high. But we are making consistent gains. And in fact, if you were a hedge fund manager and you'd made 35% in the first 6 weeks, is it a bit more than 6 weeks, isn't it? 12 weeks, whatever it is.
16.
16 weeks. You probably get a hand on your shoulder and ask you to slow down a bit, because you don't want to you don't want to set expectations for 120% gain for the year and then have to match that the next year. So actually, the sensible thing to do would be to just hold here and take your money off and go on holiday for 6 months. But
two things. Sorry, I keep talking over. We must have a delay. Go ahead.
So I say we're intrepid pirates, so we'll just carry on.
Yes, we're raiding the coasts of faraway lands and plundering. It seems to be an appropriate thing to do on June 20th.
Yeah.
All right. Two things come to mind. So I've read a few hedge fund books in my day over the years, different hedge fund manager stories and things. And, there's one consistent theme. Don't have your returns too high because nobody will take you seriously.
Yeah.
Even if you do it year after year, they want to see like a 12 or a 15% return maximum. They're not looking for 30% or 100% or God forbid 200%. That just scares them away. Not that that's what we're doing with this. I mean, we want a big return. And you're right. We could just take everything off the table and step away. But two things we're doing. We're keeping risk really low. We're not increasing our risk. It could be a big move anytime. But we could improve our sharpe ratio by, instead of having this high return, we could take a portion, let's say 10%, and we could just be buying puts. And we could be reducing those drawdowns, and maybe I get our sharpe ratio up to 2.5 or 3 or something. We could be doing that, but that's not really our intention here. And that might be a consideration we start talking about, because the time when you want to talk about and consider it is when there's nothing going on. If the market plunges 12% tomorrow, that's probably a pretty poor time to start talking about downside protection.
I'll tell you what, though, Shane. I'm pretty okay with the idea of getting a bit more aggressive on the calls when the market's looking weak. Because we're currently sort of short 3 puts and short one call. But I'm kind of okay if we get at the money or in the money on the puts, rather than roll them aggressively. I'm actually okay on just selling 2 calls against one in the money put, something like that. And then just doing that on a daily basis until it all comes back. In the current market, if we had a strong uptrend, then I might not feel that way. But for now, it seems like okay.
Yeah. And then what happens is that, like yesterday, I think you shared an article with me about someone having the 200K price target by 2025, and it scares the pants off me selling too many calls.
Yeah.
But that's the nature of crypto, isn't it?
Well, as long as you sell short dated, you can always roll for time. You can always roll into strangles or puts or whatever. There's a way out of it. I mean, it's always
as long as you've got available margin.
You are?
Yeah, as long as you've got available margin, you're right.
Yeah, exactly.
It's very true. Let me just I'm just going to bring up my charts here. I guess you can see that. Yeah.
Oh wow! What amazing!
Amazing what?
Your support and resistance zones were perfect.
They have been perfect, haven't they? Knock on wood, we keep doing that. But this is the catalyst for me talking about how I've increased my account by 5 or 6% in the last few weeks. We've been stuck, here, Wednesday, June 5th, we were up around 71,000. Now we're down around, we got down to around 64,000 June 18th. So there's still quite a range in there. I mean, that's like, 7K. That's a pretty big range, but we are technically going sideways. And we've got sort of 2 bands of resistance in this no man's land in below. And the subject I wanted to talk about. So last week I did talk about selling call spreads and selling put spreads on each side of those. And I'll do that all summer long. I'll do them low risk, and I'm not doing it based on volatility. I'm doing it based on price and how many basis points I'm going to earn. I don't care about if we're in a 30 vol environment. Well, I'm just going to take what I can get. Everything's limited risk. Everything's short dated. Fine. But in our Telegram channel, which has now been moving over to Discord, I post a lot of scalping trades I make. And I did a few the last few days using futures or perpetuals. Or maybe I did spot. Damn, I can't remember. Doesn't matter. But that's what I want to talk about here. And they all luckily worked out for me. They're not always. This is what I want to talk about today. So I'm sharing this with you. This is just my super, super basic technical analysis. The only thing that is complicated is my unicorns, as I explained before, and don't ask me how to do that. But this is just simple support and resistance areas. And if I look back, whenever you're doing support and resistance, it's just a simple rule. You look left. Can't see far enough back? Well, just go out a little bit further in time. Look left. And you'll find that all these match up. In fact, I'm creating a trading fundamentals course, which will be ready in a couple of weeks. And the funny thing is if I want to get more complicated with my technical analysis and I want to lay on Gann squares and I want to lay on Fibonacci's and EMAs and all these kinds of things, you're going to find that they're going to match up for the most part with your technical support and resistance theories anyways. So don't overcomplicate things. So last week we had this big move up, sold some call spreads, big move down, sold some put spreads. They're all good, made lots of money. That's cool. But we had some moves here. We had some moves up and down. And look, it stayed in this channel. And I told you last week, my golden rule is the range will hold, and I will trade it as it's going to hold every single time until it doesn't. And when you do this type of trading, you're going to be wrong eventually. I guarantee it. Eventually, this range will break here, or it's going to break here. I guarantee it. Whether it's tomorrow or in 3 months, who knows? So I'll keep trading like it's going to hold until it doesn't. So I'm going to take one loss guaranteed. But if I can make 100 gains until then, I don't give a shit. I don't care. And that's a lot of people have a hard time trading, taking a loss. You got to learn that you are going to take losses, and it's okay. It's okay, especially if you're making gains before. So what do I do in these situations? We had this big dip down. What am I doing on this? Oh, my God. Could it go down here? Yeah, I guess. But as always, I'm going to sell some put spreads. I'm doing it as a spread to reduce margin and to limit my risk. So I put some spreads down here. Okay, let's say it comes up and I get out or I don't get out. Let's say I don't get out and I still got the position on. And boom, we get this big move down to the bottom of range. Well, maybe some of those short calls are getting close to the money. Okay, I could choose to roll them, adjust everything down a little bit, move them out of the way. But remember, I always trade the range like it's going to hold. So what do? Do I want to pile on more put spreads? I could. And I scale into everything anyway, so I'm always comfortable. But this is where you can then make a choice. And it depends on your risk tolerance or what you think. If you really think, oh, geez, there's a 50-50, this will keep going down, but I still want to play the bounce. Well, I'm going to buy calls. I'm going to buy overnight or maybe 2-day calls, maybe 3-day calls, and look for it to bounce up. Why would I do calls versus buying the perpetual future? Well, if I buy the call, the most I can lose is the premium I paid. That's it. And we're in a pretty low vol environment, so you're not paying a lot. I buy an at the money or close to the money call, typically for scalps. I'm not buying out of the money too far usually. And that's it. I can go to bed at night, and I don't have to worry about that damn thing plunging down to 58,000 and beating me in the face. Now, on the same, and great, and if you can get out and make 2, 3, 4, 500% on those calls, great, wonderful. If it doesn't, you lose your premium. Not a big deal. I can also do that as a spread, but when you do short dated calls, you're not going to get much for the short, for the long short for the short call. You're selling up higher, so it's not worth it. Short dated stuff, I don't even bother doing it as a spread typically. But let's say you could also, or instead, you could just say, no, I'm going to buy spot, or I'm going to buy the perpetual here. Just put in your stop loss. Put in your stop loss down here. So if you go to bed, you get hit, you get hit. You might lose a bit more than you lost with the calls, maybe lose less. Sometimes I'll do a little bit of both, especially if you get a move like this, kind of down, and it's like, oh boy, this thing's weak. It's really threatening to go down. The problem is here is you're saying, okay, what we've done now is a Texas hedge. And what's a Texas hedge? Well, a Texas hedge is I'm long the underlying. I sold some puts and I'm long some calls. We're all in, baby. And yeah, it can be a little bit kind of, oh my crap, this thing's got to bounce. Otherwise, I'm really hooped, Keep your margin under control. Do a little bit. Do one versus the other, whatever you're more comfortable with. But that's what I'm going to do. And I'll play it every single time. And boom, there we are. I'm out of everything. So what did I do today on this move up through 66.5, I think it went to? Well, I sold a whole bunch of call spreads here. Literally this morning in my group, I posted it. I've got a ton of call spreads. I'm looking at them, short call spreads, starting around 67,000 and up to getting close to 69. I scale into them. I've got coverage for all those. And guess what? These happen to be the 22nd of June. I'm looking at the option chain right now. The cover is worthless. It cost me next to nothing to cover those up, right? If we stay here by tomorrow, I'll be out of almost all those. Why am I doing this? Why would I take such risk? If we were in a Wild West market that wasn't in a range, I wouldn't do this. I'd be much, much more conservative, but we're in a range. And I think I made a post to our members today that when we're trading in the summertime, low vol range, you treat it like quicksand. Whether you think quicksand is real or not, that's a debate Richard and I like to talk about sometimes, is you got to relax and you try and float. Just you don't pay attention to these minute by minute moves because the market's going to move around. There's not a lot of volume. Just relax. It's not going to move 12% for no damn reason. It won't. The market won't let it. It's hard. It's hard. You gotta get used to that. And again, I might be wrong. Maybe boom. Maybe we'll break down to 61,000. Okay, I'll be wrong once, but in the meantime, I made money. I don't care. You're going to be wrong anyways as a trader. So that's my how I'm making money in these directionless markets. I start off with the spreads going against the grain. If it's going up hard, I'm going to sell those call spreads. I'm going to give myself some distance, though. If it's really short dated, I might be selling at the money if it gets really overextended. Especially, let's say we shot up to here. I'll be selling this at the money call, expiring tomorrow, no problem, or maybe a day or two. I'll be selling stuff up here, no problem after that type of overextension. But if it's moving up and I'm selling these spreads, if it gets really overextended, that's when I'll typically jump it. I'm saying, yeah, now I'll short those perps. No problem. I'll short those perps. I'll take that bet. And typically I get a good funding rate too. All right. So that's it for today with that stuff. Richard, you, I think you, is there anything you want to talk about with, I don't think you can talk about deribit stuff. Anything special? What's going on in Amsterdam, for God's sakes? Just tell me.
I just happen at the moment to be at the offices of Centilia, which is the parent company of deribit. There's nothing intriguing going on here. I was invited to come and give my worthless opinion on a few things. I
mean, now that they met you, they're probably not going to invite you back.
I think they're just going to laugh. That's pretty much all I can say about this at this stage. I was going to suggest actually we do a trade live if we've got time when we actually go, because I think we're just about in the money on one of our puts expiring tomorrow. And I'm going to suggest that we turn it into either a straddle or a strangle, and we might as well do that online.
Sure. Let me move some stuff for the way you can see my screen here.
Yeah, I can see it. Yeah, it's the 21st Bitcoin. I think now's a good time to do it because the market's just weakening off a bit prior to the opening. Is the US about to open? It is, yeah. Yeah. Okay. So here's a synth miner account. We've got these expiring tomorrow. Oh, geez, these are yeah. So we're short the out the money, and we're short. Yeah. So what I'm going to suggest is that we just offset that 66K put by selling the 66,500 call.
Ooh. Okay.
And then buy cover a few $1,000s up.
Yeah, because we did have a short call here, which got bought back.
Yeah.
So we're a bit disbalanced. So I can go to, I'll put an order in at 60. I guarantee we won't get filled. Maybe I should just hit the bid here because
you could. I mean, I think it's decaying so fast. There's only like 12 hours to go, right? So it's decaying now.
Change
it to 55 because it's about to reverse.
All right. So sold to 55s, and I can buy some 68s or something.
Yeah, 68 is fine. Yeah.
12 pips. 60. I like paying less. This is a margin exercise.
We might have to pay 9.
Yeah, it looks like it. Nobody even has bought, and I don't want to. We don't have a lot of time here, so I'll just go ahead and buy that. All right, fine. So we put this spread on. We did have cover. Look, we have cover way up here, but it's so far away. It's not really cover. It's useless. So this is debatable. Some people might.
That position now has about $800 of premium in it, more or less. So we can afford to be wrong by $800 and still be breaking even. So I think that's okay, right?
Yeah.
I think
so.
I think once these expire, we just roll these into a 2-day just unbalanced strangle until it breaks.
Yeah, we could look at moving out to the 23rd. Let's see, devol 49.2. Yeah, let's see what happens tomorrow morning. If maybe we'll get really lucky and we'll expire right here. I mean, I'm not going to count on that. It's probably not going to happen.
No, I think if we take the expiry tomorrow morning and then roll it over before the CME opens on Friday, so between the deribit expiry and the CME expiry, I think we'll still get good vol. We can then roll it into Sunday and pick up a chunk of vol for Friday.
Yeah. The only thing we've got some short puts out here on the 28th next Friday. Oh, you can see my DGen order. I put it up at $1 because I thought we might get a pop up to 67,000 or something.
Yeah,
I might. I don't like to leave orders hanging. I'm actually going to cancel that now. I'll put this call on. Yeah.
Well, particularly now we've sold the short dated call here tonight.
Yeah. So we'll address that tomorrow, and we'll do that on a live stream. We'll figure that out.
Hi, Giuliano. By the way.
Yeah. All right. Well, we're almost out of time. If anybody has any questions about the scalping strategy that I do, again, I probably put on 5-6% in the last few weeks doing that. It's not rocket science. You just got to relax and wait for things to happen. And
I've done okay. Keeping things tight and short dated and low risk. I think I've put on about 20% in the past 2 or 3 weeks. It's
20%.
Yeah.
You're trying to show up my 5-6%.
Well, no. To be honest, there was a bunch of positions that had just been left there from being rolled from other positions, and they just suddenly started paying. So just got lucky,
Sure. Yeah. Another thing I'll mention I'm doing in some discretionary accounts too is I'm starting to pick up some longer dated, I don't want to say Vega, but longer dated calls. Just because, you see these news articles, you see things, I do still think there's a good chance we're going to make a run. And I just don't want to miss it. Well, as vols are coming off and off and off, things are getting cheaper. I don't mind picking up little bits, and it'll accumulate. So if nothing happens until September, fine. I'll have accumulated all kinds of strikes and expiries long that may or may not pay off. So I'm quite happy.
I agree, Shane. There's a specific trade I want to do along similar lines, and I've got reasons for it. And maybe we can discuss that next week on next week's call.
Yeah, sure. Let's do that. Andrea, she says, in my humble opinion, guess this is the best and most interesting trading course out in space.
Oh,
well, thank you very much.
That's very kind of you. Thank you very much.
Someone's asking you to get some free swag someday.
Yeah, we should
keep that up. Swag, right? Yeah. We should get like T-shirts or mugs or something, and everybody can post a picture of their mug.
Deribit about whether they've got some swag we can give away.
That would be nice, yeah. And we're not talking Teslas. Yeah. 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 You're in Amsterdam. Make some things happen,
Yeah, okay.
Come on.
Let me go. I'll go and shake things up.
Yeah, fantastic. Looks like we've got no questions today. I mean, I'm not surprised. I mean, I think what I was talking about here was fairly straightforward.
I think you've put everyone to sleep. So.
And that could be it. It's my raspy voice. It just lulls them off. They're so comfortable. Maybe I need to. Do you remember back in the 70s and 80s, there was a radio personality in the United States. I'm not American, but I know about him. Wolfman Jack. Do you remember him? Yeah. Wolfman Jack from the Wolfman Jack Show. Yeah, maybe I'll go for that sort of persona. Yeah. All right. Vladimir, thank you for the kind words. Appreciate it. Hey, we love doing this. It's a lot of fun trading this stuff with you guys and sharing our thoughts from week to week. So fantastic. If that's it for today, let's wrap it up. And good luck with the rest of your trip in Amsterdam. Say hi to everyone for me. I don't know anyone there, but say hi anyways. And let's see everyone next week.
Okay, cool. Thanks. Thanks, Rob.